What Washington fears greatly is if the planned new BRICS currency, which is called the unit, which will be based on 40% gold and local currencies, local BRICS currencies, but all of them linked to gold. If that gets off the ground, it's the beginning of the end of the dollar's domination. How many countries will dump dollar assets and go to an asset that has substance to it instead of one that, if you take the value of gold of the dollar from 1980 to today, it's now worth 25 cents.
In recent years, economic and geopolitical analyst SimonHunt has drawn attention with his commentary on global markets, particularly on precious metals, commodities, and international economic trends. Hunt's analysis paints a picture of a changing global financial landscape, with gold playing a pivotal role. Hunt argues that the rising price of gold is a harbinger of global economic uncertainty. He posits that traditional fiat currencies are losing their appeal, while Eastern countries, notably China, increasingly gravitate toward gold. According to Hunt, this shift is not just a fleeting trend, but a sign of more profound changes in the global financial system. At the heart of these changes is the BRICS alliance, which has made significant strides in recent years towards challenging the dominance of the US dollar. The bloc, now consisting of 9 members, has confirmed the development of a new currency, with more details expected at their upcoming October summit. This move is seen as a direct attempt to create an alternative to the dollar-centric global financial system. The proposed BRICS currency is expected to be backed by gold, a factor that Hunt and other financial experts believe could be a game-changer. If successfully implemented, this gold-backed currency could mark what Hunt describes as the beginning of the end for the US dollar's global supremacy. The alliance's recent gold-buying spree lends credence to this theory, suggesting a concerted effort to amass gold reserves in preparation for this new financial era. However, the picture is not entirely straightforward. Recent data from the China Gold Council shows a nearly 6% drop in total demand for bullion in the first half of the year compared to the previous year. More strikingly, according to Bloomberg calculations, jewelry purchases have plummeted by 52% in the second quarter. These figures suggest that while institutional interest in gold may be rising, consumer demand, at least in China, is currently facing challenges. Despite these short-term fluctuations, Hunt remains bullish on gold's long-term prospects and boldly predicts a sudden spike in gold prices, suggesting they could reach $3,000 to $5,000 per ounce. Please tune in for our exploration of SimonHunt's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
Gold is telling you something. It's telling you that there's a very uncertain world out there, that fiat currencies are actually going to not be wanted. Why is it that the East has been buying a lot of gold? Why is it that about 6 months ago, China's central bank provided a system whereby the population, through their bank accounts, can buy physical gold directly from the Shanghai Gold Exchange, and also on a never-never basis? And why is it that physical gold jewelry and these little gold nuggets that have been put on sale have been booming? What Washington fears greatly is if the planned new BRICS currency, which is called the unit, which will be based on 40% gold and local currencies, local BRICS currencies, but all of them linked to gold. If that gets off the ground, it's the beginning of the end of the dollar's domination. How many countries will dump dollar assets and go to an asset that has substance to it instead of one that, if you take the value of gold of the dollar from 1980 to today, it's now worth 25 cents. I think we'll wake up one day and the gold price will be 3,000, 4,000, 5,000. I don't know. The basic message is you have to have gold in your portfolio, and preferably in a place outside the banking system. It's like all bull markets, you have pauses. And I think this one has been a desperate attempt by the Western banks to try to give gold a kick down.
You communicate necessarily with the local banks or whatever, but what's kind of the sentiment on gold there?
I'll be honest, I'm not in touch with them, but everybody I talk to, bullish. I mean, bullish long term, not necessarily for tomorrow. It's an asset that you have to own.
As global tensions continue to escalate, economic and geopolitical analyst SimonHunt offers a sobering prediction for the near future. Hunt foresees an intensification of conflicts in Europe and the Middle East, painting a complex picture of potential military engagements involving multiple nations and non-state actors. Hunt's analysis suggests that the existing geopolitical landscape could evolve into a more volatile situation, with NATO and Russia potentially finding themselves at odds in Europe. Simultaneously, he anticipates a significant escalation in the Middle East, involving Israel, Hezbollah, Lebanon, Syria, and possibly drawing in Iran. The ongoing conflict has already triggered a series of cross-border incidents and attacks that threaten to destabilize the region further. In Lebanon, Hezbollah fighters have engaged in skirmishes with the Israel Defense Forces along the border, raising fears of a potential wider conflict. Meanwhile, Yemen's Houthi rebels, believed to be backed by Iran, have launched missiles targeting both Israel and commercial vessels in the Red Sea, expanding the conflict's impact on international maritime trade. Let's get back to the interview.
We will see an intensification of the wars in Europe and in the Middle East that basically pits NATO versus Russia. And in the Middle East, Israel will launch a major attack, Hezbollah, in Lebanon and Syria. The question then is, will that bring in Iran? And will it bring in Russia? So what we should expect before the end of September is a massive shock to the system, either by an attack being made on Russia, perhaps propelled by a false flag operation that forces Russia to make the first move, to follow what NATO in early May said to member governments: there will be an attack on Russia and that you should warn your population to stock up with food and other essentials. That only briefly appeared, I think it was in the Times in London, and then got deleted pretty quickly. Either we will have a physical attack, we will have a cyber attack, or even so desperate are these people controlling the levers of power that somewhere there'll be a dirty bomb. So all I'm saying, we don't know what's going to happen. Something is going to happen, because this group know that if Trump got into office, not only would they be all, probably around 5,000 of them, in different sectors of ministries and administration, be out on the streets, but that decades of planning to dismember Russia would be wasted. So the odds are pretty high that before the end of September, there will be a shock that will send equity markets and base metals down by around 40%. And this appearing at a time when the global economy is weakening. You can see it in the manufacturing data in June, slipping over, and even in the services sector, also slipping over. And the services sector has probably been pushed up by the strength of equity markets. So that, in a nutshell, is my big picture, that we won't see the trough in business activity until the early months of next year.
Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.